Let's stay on the markets right now. Joining the company is Larry Shover with Efficient Capital Management. Larry, I'm going to ask you straight out. Is there enough money out there to save Europe, to save Greece, to save that mess? Is there just enough money?
Oh, there's absolutely enough money, but it's going to require a lot of suffering. Right now, they could borrow from the ECB, lending it to the EFSF, the European Financial Stability Fund, and stopping bank contagion. The problem with that is that potentially it's going to cause fiscal transfers. It's great.
All right, let's slow down a little bit. Let's walk the audience through this.
Yeah.
Because fiscal transfers, what are you talking about?
Well, put it this way, the Eurozone is not a nation state, so it's going to require one nation to lend and pick up the debts of another nation. It'd be pretty easy in the United States to do that. One state falls in trouble, the other states can bail them out. Not likely in the Eurozone. So it's going to require a lot of suffering, and Germany is not on board with this. Who's got to suffer? The German people are going to suffer at the end of the day. Their taxes will go up. They'll be run on banks. Somebody has to supply the transfer.
So, Gretchen, the German people are going to suffer to pay off the Greeks who've wasted all of their wealth.
What I'm going to say is, why is it up to Germany?
Well, they're doing the best right now.
Yeah. They have the money.
They have the money.
They have the money.
So their own citizens are going to pay the price to bail out countries like Greece.
At the end of the day, they're going to have to suck it up and pay it up for everybody.
But isn't there going to be an orderly default? I don't think it'll be orderly, but Greece is out. I mean, why are we delaying this, right?
We're delaying it because nobody wants to make the hard call. Nobody wants to say we do have to suffer.
The German citizenry does.
That's correct, but they have to do a lot more suffering, and we're going to see contagion and run on banks if it doesn't happen sooner than later.
So let's play that out then, Larry. How does that impact the stock market? How does it impact the U.S. economy?
It's according to how it plays out. If it plays out the way
let's
we're
say
talking
it plays
about,
out the way you think. In your mind right now, how you frame this, how does it play out? They do come to some sort of solution. It's a painful solution. Right. What's the reaction?
The reaction is the stock market is going to stay where it is and go lower and just sit there for years and years.
Their stock market or ours?
Their stock market and ours. I mean, ours as well. We'll suffer because of it. It's just, I think there's going to be an underappreciation of paper assets because of this and some other reasons, but really because of what's going on in the Eurozone. I just think productivity is down. It's going to take a long time for us to get out of this.
Yesterday, commodities had a pretty good bounce. Copper was really up huge. Is that an indicator? Because for a while, you know, copper was a sort of a proxy of what's happening with the global economy 6 months, a year from now. Yeah. Is that suggesting that maybe the worst could be over?
Not right now. I think right now we're in a risk-on, risk-off market, and typically copper is a great indicator. But right now it's had a range of $7,000 to $10,000 a ton.
People use that term a lot: risk-on, risk-off. For the average person watching, does that just mean the market's emotionally driven? You know, I mean, one day risk is on, one day it's off. What the heck does that mean?
Yeah, right now risk-on means like everything's okay. The news coming out of Europe is okay, so therefore it's okay to buy commodities, buy stocks. Risk-off is just the opposite. Everybody's just searching for a safe haven, whatever that is.
That's changing hour to hour right now.
It sure is. I would stay out at all costs.
All right, Larry Shover, we appreciate it.